If you own assets, hiring a tax accountant is actually worth it. You end up saving more than what you pay to have the accountant. And I want to preface this and say if you don't own assets, then it's not worth it. You might be asking yourself right now, like, well, how do I know if I own assets? Like, what do you mean by this? And so if you just have a W-2 job and you're renting and you own a car, like, I don't think that you really need a tax accountant. And this is coming from, I'm going to school right now full time for accounting. I'm in my junior year. I am not a financial advisor. I'm not a CPA yet. So I'm not here to give you specific financial advice just for you. This is just my opinion. Full disclaimer, this is my opinion. Um, and so, but here's the thing, if you own like a rental property, or if you own a duplex, and you live in one side and you rent the other side out. There's certain things that an accountant can do that can potentially save you thousands and thousands and thousands of dollars per year that you wouldn't get if you didn't really understand this stuff. If you just prepared your taxes yourself when you own this stuff. And so here's an example of this, and that's depreciation. And so you might be thinking like, well, what is depreciation? So let's say that you own a duplex and you buy this duplex, you live in one side, you're renting the other out, so you're house hacking, and you're doing this so that the rent that's coming in from the side that you're renting out uh, covers the mortgage for the whole property. And depending on what state you live in or where you're at, it may cover the mortgage, it may cover almost all of it, and then you're just putting in a little bit per month, maybe 300, 400 for the mortgage and property taxes and all that stuff. But you're basically living very cheap because you're renting the other side of this property out that you own. Well, there's something you can do. You can write off your depreciation. And so what this means is over time there's certain things that will need to be replaced in the house, and this is just a given in both units, right? And this is like all the appliances, they need to be replaced, and blinds and curtains and different things that came in the house that the renter didn't have to purchase. Well, as the owner, you're going to have to replace those things sooner or later. And so when you do, you get to write that off as basically like an expense where the cost of those items are not taxable for you. And and so what this means is it reduces your taxable income. And I've seen I've seen, and this is just like in school and in class when we're going through exercises for this, just being straight up because I haven't touched anybody else's financial statements. And if I did, I wouldn't talk about what I see in them here on YouTube anyways. Uh, but so you could potentially, depending on all the numbers, be able to reduce your taxable income by like 20,000, $30,000. And that's a substantial savings. Let's say that you're paying 20% in taxes, right? And you reduce your taxable income by $20,000. Well, what's 20% of $20,000? That's $4,000, right? So that means that that's $4,000 less that you pay in tax that year because you were able to write off these depreciations, and you were able to do it properly because you actually hired somebody that knows this stuff to do it for you. And so the reason I say this and why I'm sharing this is because before I started really learning about accounting, I didn't understand um, how much accountants can actually save you if you are somebody who owns assets like this. And so they don't just help you manage your finances. A CPA doesn't just tell you where to invest and whether you should put money into your 401k or your IRA. Uh, like they'll be able to help you with this kind of stuff too. And if they're doing it right, the amount that they save you per year should be more than what their charges are. So even if they charge $500 an hour and it takes them, 10 hours to do your financial statements for the year. Well, if it takes them 10 hours, it's probably going to take them less than that. But let's just say that it took them 10 hours. Well, that means for the whole year, for everything for the year. Well, that means that you would owe them $5,000, right? And so if they end up saving you $40,000 in taxable income, then, they've reduced your tax bill by 8 grand or somewhere around there, right? So you end up with $3,000 more in your pocket because you paid them. And so I don't want to get too deep into the numbers here, but the thing here, because it's all theoretical right now, I'm just making up these theoretical situations to try to help you understand this. But if you own assets, it's definitely worth finding a tax accountant in your area, a CPA that specializes in tax, and like depending on what assets you own. If you own real estate, then you want to find a tax accountant who is very knowledgeable in real estate. If you have a bunch of different stocks, um, let's say that you're a day trader and you're buying stocks and you're selling stocks all the time, you want to find an accountant slash advisor who specializes in that field, because they'll be able to get you the most savings. If you just get a run of the mill CPA, and expect them to know everything, then that's probably, I mean, they'll be knowledgeable in all these different areas, but they won't be able to get the most savings for you, um, in every area. So they'll be able to do all this stuff and do it up to code and do it legally. That's what a CPA does, but it doesn't mean that they're going to know every little write off and every little thing that they could possibly squeeze out of the situation for you. So depending on whatever it is that you're doing, highly encourage you to look into just getting an accountant. And if you don't own assets like this, if you don't own physical assets, if you don't own buildings or houses, or own a business that has a lot of assets, it's the same thing if you own a business like a store and you have trucks and you have equipment, and also, like, of course, inventory if you're selling inventory. Like, those are all assets. And so you want to find an accountant that understands this stuff too, because they'll be able to get depreciation write-offs for your business, which means that your business pays less tax. This works for the business side of things and the personal side of things. Um, but if you don't own that stuff, then you don't really need that. If you don't know how to prepare your own taxes, you can just go to a run-of-the-mill tax preparer, like H&R Block, or at my school we have a program called Vita. I think it's nationwide, where you can basically get your taxes prepared by um, college students, people like me who are going to school for accounting. They'll prepare your taxes for you for free, just for practice and to have it on their resume. If you don't own assets, you can just do that, and that's fine. Especially if you're just working like a W-2 job. But if you do own assets, it makes sense to pay an accountant.